Morning, everybody. This is Ryan Derks. We have an October portfolio update for you here right now. You know how I like to operate here, so I'm not going to waste any time. We're going to go right into it. But first, this is not investment advice. If you want investment advice, you need to be a client of Derks Financial. So this is just commentary, and we want to give folks an update over their stocks that they have. Not in the review today, but it is November 7th. The presidential election has just happened, and as you guys know, the market is rocketing upwards right now. But we won't get into that. Okay, we have 1, 2, 3, 4, 5 stocks we're going over today. First is United Healthcare. United Healthcare had their earnings last month, and they beat earnings pretty darn well. The revenue was far higher than expected. But most importantly, it was the growth that was important. 9% growth in revenue and 4.5% growth in their earnings per share. So, so again, nothing else too crazy there. It says here earnings are still affected by the cyber attack they had. Not a big deal. Can't do much about that. They've recovered pretty nicely. United Health doing real well for us this year. You can see where it kind of popped here just from that great news, those good earnings. Doing real well for us. Next, Microsoft. Microsoft had their earnings this month as well. And again, they had great earnings. Revenue growing. And also, oh yeah, I wanted to say this. Where did most of the growth come from? Not only are their margins growing, their profit margins and so on, their earnings per share is growing, their revenue is growing, but their cloud service is growing unbelievably, up 30% year over year. And that's really good for them because that is a spot where they can get really, really nice margins on their revenue. So Microsoft, how is Microsoft doing? Not bad. You know, we were up at one point, what is that, about 20, yeah, we were up 27% on Microsoft earlier this year. We're up 15 right now. But as you guys know, great company. They'll do just fine. Let's see, next, Visa. Actually, was it? Yeah, Visa. Not only did Visa beat their earnings, first off, they had year over year, 12% growth in revenue, 16% growth in their earnings per share, and 56% net income margin. So their profit margins are really healthy. Like the guy says here, Visa is a very mature company, but it continues to prove people wrong. Not only that, but boom, Visa reported great earnings, but more importantly, announced a 13.5% dividend hike. That is awesome. So you guys, for those of you who have had the Visa the longest with us, I mean, we bought Visa 2 dividend hikes ago. So that's incredible. That is one of the biggest strategies here at our office. It's worked out so well. I cannot wait to show you at the end of the year. I'm doing a recap on all of our stocks that have increased dividends. And at this point, I think all but one of our stocks have increased their dividend this year. How's Visa doing? Hey, they're doing pretty well, up 18%. You can see up 12% just since their earnings have come out. So yeah, they're doing really, really well, even though, if you guys remember, look, you see this big drop that happened, and we talked about it on the last video. The Department of Justice is investigating Visa for kind of being a monopoly and whatnot. And I said back then, look, investigations happen. Don't let it cause you too much lost sleep. And here we go. They're already recovered from it. We don't have any updates on that investigation, but I'll let you know when something comes up. So yeah, Visa doing really well last month for us. Also, ADP. ADP had earnings, and we'll go into that in a second, but ADP announced last month that they are also increasing their dividend by 10%. Again, those of you who have been with us and had ADP for the longest, this could be the third. I'll have to double check. It could be the third dividend hike we've had from them. I think it's the second. It could be the third, but I'll double check. Anyway, aside from that, great earnings. They beat earnings. They have, let's see, not only is their revenue, their dividend increased by 10%, they are forecasting their revenue to grow another 6.5% between now and next year. But yeah, the revenue growth right here is showing growth of 12%. So again, that is awesome that over the last 12 months, they've been able to grow their revenue by 12%. That is awesome. And you know what, you guys, what I like about some stocks about like Visa and ADP, no, they're not the sexiest new thing on the TV screen, but like they are just tried and true, strong companies, very well run, very profitable, and a great dividend. So ADP is up 30% 31% at this point this year for us. And back to what I said, it's not the sexiest stock out there, but if somebody said, hey, here's a stock that's pretty robust, pretty well established, boring company, and it's going to grow 30% this year, that's a pretty awesome bet to make. So the last stock we have, Apple. Apple has actually been not that great this year for everybody. I mean, it's growing, so we're up, but it's certainly not spitting out all sorts of awesome headlines like you might expect, for it to have in the past. In fact, I couldn't find the article, but I'm almost certain I saw where their most latest, those goggles that they're releasing, that they're actually cutting back on those goggles due to a huge lack of demand. So that is not good. But Apple has their fingers in so many different things that they're doing just fine. So how did their earnings go? Well, their earnings per share is increasing, which is awesome. Revenue growing nicely. Their iPhones did not do as well as that. I mean, so the revenue on iPhones is doing fine, but I think everybody knows pretty clearly that their iPhone revenue is not what it used to be. But it's really, while these numbers are small, other product revenue and services revenue, that's been, especially services revenue, that's the Apple App Store, that is iCloud storage, and then you've got other products like wearables and so on. These are the two spots that people have really identified as being the fastest and best growing spot for Apple at the moment. So even though it's not quite 46 billion like the iPhone is, it's still growing really nicely, which again, we don't have to grow 100% year over year or something, but Apple has a really, really good hand on what they're doing. Their gross margins are increasing as well. So again, they're being very disciplined on how they run their company. And Apple is up 22.5% for us this year. So again, that is awesome. So that's really all that happened in October. That is all I've got for you. The next episode, I'm going to cover a lot of not only what's happened with our stocks in November, but a lot of the presidential stuff, because like I said, the market is exploding. Your accounts are up 4, 5, 6, 7% just this week. So anyway, I'll cover that in next month's episode, but that's all I've got for you guys. So if you need anything, I'm here for you. Reach out to me. I'll see you later, okay? Thanks.